Welcome to our midweek Forex and Futures forecast. It's good to be back after the summer break. Good to get into September, seeing the markets starting to move again. My name is Norris, and I'm the Director of Education at Trading University. As always, we need to remind you that trading involves risk of loss and is not suitable for everybody. These are real-time market snapshots and may not be replicated going forward. The first market we're going to take a look at is the Australian dollar. The Aussie came to life. You finally built a base there. As is the case so often, you need that double bottom before you can get a little bit of upside, and they've had some upside the last couple of days. I tell you what, they shifted that 10 and that 20-day pattern, pretty much shifted together. That's all you really need is from a day trader. If you have both the 10 and 20-day patterns higher, that'll work for you generally. So the short-term guys have been making some hay on the upside. You see some resistance levels there. Those are our risk tolerance threshold levels. They're really just retracements drawn from that level and that level. Essentially, your 50-day pattern is still bearish here. So hard to get too excited from a position standpoint until you would at least eclipse those levels. Then perhaps you look for a dip from there. Kind of hard, to get a little excited now, even from the shorter term trader's perspective. I think the air is getting a little bit thin up here. We'll have to see how this market handles resistance. We'd still be taking short term buy signals, however, into that resistance, and we'll see how the market reacts. So Aussie, maybe a little bit more room on the upside short term. Nothing to write home about just yet, though. Next market, the Euro US dollar. The euro, really, I think to get scale on this market, you've got to pan out to the weekly here. It really sideways. You've been sideways for most of the year. Now, what I want you to notice on this chart is that big pattern of lower highs, lower highs, lower highs, lower highs. So you still have lower highs long term. Now, when you get kind of a roof like that, it doesn't surprise me when the market's hitting resistance and there's so many players out there that are still they want to talk this guy down, and it wouldn't surprise me if you pop that resistance just to gun those stops out of there. If that is the case, then we'd look for a double top. I think that'd be the ideal long-term sell setup here, a double top against the January high, a double top against the 2012. Yeah, that'd be a new high for 2012 too. So there you go. You get up here, you'll run all the stops out. You'll potentially make a 2-year high in the euro, but you'd still essentially have that long-term pattern of higher lows here. So potentially you look for that double top if this rally gets eclipsed, if that resistance gets eclipsed. Let's take a look at it again on the daily. Yeah, you wouldn't be all that far away from there if you do pop stops on the way up here. You have to respect that resistance just below 134 even, though. I definitely would respect that resistance below that 134 even. If it gives way, I think that sets us up for a nice sell setup, a potential double top there. We'll have to see. Things are getting better in Europe, and that's really making some of the shorts nervous, and that's emboldening some of your traders some of your macro traders that feel maybe the euro was a little overcooked on the downside, given that the fundamentals are turning over there. From a long-term perspective, I'll point that out again. This will be interesting to see if you get a double top against the 2013 high. Next market we'll take a look at would be the pound dollar. Pound's been having some fun on the upside now. You're coming up on resistance. There it is. You can see it. You have a risk tolerance threshold level right there. That happens to be where you had previous support. So we'll see if support becomes resistance. I think it was a pretty good run here in the pound. Again, it may be one where the air is getting a little bit thin up there. You have pretty good resistance in the pound at that level. Let's take a look at the big picture in the weekly. This is the midweek report. Usually we hold off in the weekly to the weekly report, but there you go nonetheless. Boy, that pound came all the way back. Yeah, I think it'd be difficult for the market to eclipse that resistance level right there, just above 58, 50, 58, 55 or so, 58 double nickel. So potentially you look for resistance there. That's not going to stop us, however, from taking shorter term signals. If you're a day trader, you're going to keep on looking to buy dips short term because that market's up pretty good. It's a market also where you have the 10, 20, and 50-day patterns higher. So you have all those short-term patterns higher. That'll continue to embolden dip buyers there. Next market we'll take a look at it be dollar yen. Dollar yen looks to be breaking out to the upside. You took a little breather today. If we were to put a trend line, put the trend line on top of that wedge or that triangle, potential breakout here. That's reminding a lot of folks that you made good hay on the way up. A lot of us made good money on the way up in here. If they continue with that, you could see potentially they're hoping for a replay of that. I don't think you'll see a replay of that. That's a pretty massive move. But nonetheless, I think you probably do have some more upside here. I think 106 has been a long-term overall target for us, somewhere up in there. So, yeah, I think 106 could be in the cards between here and year-end. Looking at the 4-hour chart, it looks attractive to me to buy a dip here. If you get a pullback, I think you get a pullback to that purple line. If you got a 50, that it already gave us 150% retracement. You get a double bottom on that purple line, just below 99 even, 99, 98 and a half. That'd be an interesting area to look. But we'll see. It may just, you may do another 50% of this move here and bottom out somewhere around 99.40 or so. So we'll see. But I think overall there's probably upside in dollar yen. Next market would be the stock market. Stocks came rip-roaring back. Boy, last Friday was really an eye-opener when, it wasn't the best number at all, the unemployment number last Friday, non-farm payroll. However, that opened the door to speculation that they're going to continue to pump $80 billion a month into the bond market and the mortgage markets, et cetera, the Fed, that is, and that was seen as a bullish thing for the U.S. stock market. And you could see this was last Friday's trade where you kind of yo-yoed back and forth, but at the end of the day, they managed to close it stronger, and that was a big buy signal there. In doing so, they also shifted that 10-day pattern bullish, and that 10-day was bullish, shifting in line with that 50-day and off to the races this week. So we enjoyed the rally in the stock market this week. Now, I would think as far as upside, sure, I think you've got a shot at the high. The 2013 high, and you probably stock market being the stock market, you'll probably punch out some higher highs along the way. So we're still in the buy the dip camp in the stock market. They couldn't retrace more than 50% of this move. You bottomed out. You gave a nice saucer bottom right on the 50% of that, and you have to heed that as a trader. We're big believers that the underlying fundamentals in the economy, in the business cycle, are always going to be reflected in the pattern on the chart. If you have a pattern of higher lows and higher highs, that means there's good things going on out there. We don't always necessarily see eye to eye with what's good and bad in the big world out there, but I think you can rest assured, from our perspective anyway, the pattern on the chart is going to reflect those underlying fundamentals. So the bull is still long and strong. Next market, we'll get into the commodities. Our old friend, the corn market. You really have to pan out to weekly to get perspective here. Here's where I want to look. I want to pan out there and see what really is our long-term, what would be that primary buy zone, or even longer, that grand pattern buy zone. And there it is. Wait, I think we need to go a little further back than that. There we go. And you can see you're a little beyond, you're beyond that 50%. Generally, if you get beyond the 50% of such a large retracement, that means you're going to generally look for a double bottom. So corn is in that area now where I think potentially you look for a double bottom. Now, rather than play it in the futures where you're pretty highly leveraged, you may want to take a look at corn, the exchange traded fund, symbol CORN. This is interesting. I think if you get a double bottom here in our zone there, you get that double bottom, I think you have to step out. You start dollar cost averaging corn there with the idea of accumulating. Remember, corn's not just a staple of a feed product for livestock, etc. We eat it, of course, also, but it also plays a big role in ethanol. So you combine the food and the energy play. So look for a double bottom here in the corn in CORN, the exchange traded fund, right around around $34. I would look at that. So that corn is something on our screen now. Let's look at the gold market. Gold came to life over the summer. Let's go back down, scroll back down to a daily chart. You did shift your 10-day, your 20-day, and your 50-day higher. When you do that, you really open the door for both shorter-term traders and swing traders. I think there's some room on the upside in gold here. There you can see potentially you do have more serious resistance, 1470, and you have a trend line in play here too. So, for the longest time I have not been enamored with gold at all. It's been in a bear market. I'm starting to like it. I think longer term, this may be a dip to consider buying here, right in here, and I think you go beyond that high. Well, I think you get one more leg up similar to this leg or that leg, and then we'll see where that takes us. Really long term, though, I would like to see gold come down here and give a double bottom between perhaps now and the year end. But, we'll have to see. If it's in play on the upside, it may stay in play on the upside. But I'm much more likely to be wanting to buy a dip in the gold now that you shook off, that you shifted that 50-day pattern up. And, that opens the door for gold. So I'd love it. In a perfect world, I'll get a double bottom at 1200. But ideally, as you guys know, we don't always live in a perfect world. I don't always get what I want when it comes to markets. I think most of us are in the same boat there. But no, I do like gold. I'm interested in buying a dip long term, but short term. Here's a 4-hour chart of it. I think it's actually very interesting right in here. See how it continues to hold that level, and now you've got that trend line coming up. So if you see a momentum shift here, you may be able to see some upside there. And I think if it does take off on the upside, I think you eclipse the August highs. One more market we'll cover, the crude oil market, and that'll be a wrap for us. Here's crude oil. Let me go to a daily chart. I'm kind of surprised you didn't get a bigger rally with all the politics over Syria and, the Middle East overall. I'm kind of surprised that the gold, they've kept the lid on the crude oil market here. So that tells me that, I think your risk comes in being long this market. Anytime you didn't get a big push that you thought you should, and there's a lot of players piling up in there. If you look at crude oil, it's really where it was mid-July. So it hasn't gone anywhere. So I think any surprise would come on the downside in this market. Hey, thank you so much. And we'll catch you with the weekly report over the weekend. Thanks now.